Well, the last street ends in the green for the fourth straight week. The Nifty is now touching distance from an all-time high. What a week it was. The mid-caps outperformed the blue chips while banks underperformed. On this week's edition of the Editors Roundtable, we take stock of the big, mid and small cap movers. We put the spotlight on holding company structures and why auto companies have outperformed in a big way this year and what the managements are talking about. By the way, the commentary was solid in the week gone by. I'm Sonia Shanoy, and today, of course, I have all the editors with me. Anuj, Nimesh, Nigel, and a special guest as well, Ravi Dharamshi, joining us on the show. Ravi, thanks a lot for being with us here in the studio. Well, since you're coming here to the studio, is it the first time you're here? I remember you came for Smart Money earlier.
Yeah, I've been here a couple of times before.
Okay, and this time is special because the markets are at an all-time high. So I guess the energy is good. How are you feeling about the market?
Index is not, but the markets are at a new high.
So, index is almost there. We had a closing high actually.
Almost.
And I think we missed the high by about 30 points on the Nifty.
Yes.
And but you're finding that euphoria? I mean, normally we see around all-time highs, big euphoria, everybody gives you tips. Is that the scene this time around?
Not at
Not
all.
yet.
I think we use the term euphoria very lightly.
Okay.
Euphoria is when you throw all caution to the wind. Just because price has gone up doesn't mean that there is euphoria. I think it will have to be many quarters of continuous performance for us to say that, okay, we are in a euphoric zone.
Sure.
When time period where corporates announce capex with leverage and considering that business is going to be flowing normally and traders throw the caution to the wind, have huge leverage position. FIIs are still net negative on the market. They are still negatively positioned in F&O market, and on the cash market they barely started buying since a month. So nowhere close to euphoria.
Okay, Ravi, what could be a potential party pooper? The monsoon is something that we're waiting for. But, before we're going to highlight a lot of stock sectors and we'll get a little euphoric as the session goes by. But you want to put some caution on board first?
No, so I don't want to put any caution. I don't think there is any reason for caution. But if you have to think about two big risks, one is, of course, that valuations go overboard. And that can happen. I don't think it is at market-wide level, but at a company level, sector level, it can happen.
Yeah.
And second thing is, of course, we are all constantly worried about what's going to happen in the 2024 elections. That's the big unknown. But I think there is still about 12-15 months to go. And during that period, we can still have a rally. So those are the only two things that we should be worried about.
So the markets have risen for the fourth consecutive week, right? And although the Sensex and the Nifty went up about 1% this week, it was the mid-caps where all the action really lay. And in that context, Anuj, a lot of things took place, right? Mid-caps have come back in a big way. So many pockets have come back, whether it's, some of these auto ancillary companies, the defense companies, some mid-cap IT companies have come back as well. So although the headline index doesn't say it much, all the parties beneath the surface.
Oh, absolutely. In fact, you know what? The Sensex and Nifty, they hit closing highs. Today we had closing highs. So for all practical purposes, for a lot of people, closing levels matter a lot. So we hit new highs. And you know what? All-time highs were also within sniffing distance, but at least closing highs were achieved. One more thing, the mid-cap index actually hit a new high every day of the week. Monday hit a new high, Tuesday a new high, Wednesday a new high, Thursday new high, and today also a new high for the mid-cap index. I think the point you made about themes and stocks, I think that's very relevant. I think what's driving this movement, just to take the point forward that Ravi also mentioned, earnings growth is something which has clearly been a big factor, and that's taken this market forward. In fact, I was looking at the fact that FY23 EPS has gone up about 10% from FY22, and the index trades at 19.5 times. I was talking to Sunil Singhania the other day. He said the euphoria starts at 23, 24, 25 times. It goes up to even 50 times. What are we talking about right now? In October 2021, the Nifty was at 18,600. Today, 1.5 years later, we are at 18,800. And in between, we've had 1.5 years of about 20% earnings growth. So the market itself is not very expensive. And, another point, there's a lot of money chasing stocks. There's a lot of appetite. Look at the example of today's listing. The IQ listing, right? I think 40-45% premium, and a lot of people say that even at these levels, perhaps it's not horribly expensive and may still be a good bet. So it just tells you that clearly the market is chasing ideas. In terms of leadership, Sonia, it's also imperative to note that FMCG and auto, that's really been the backbone of this market, and both these indices have been phenomenal and making new highs. Of course, near-term leadership is with pharma and metals, but The only sector which has sort of not made up its mind yet is Nifty IT. I think that's still around the 200-day moving average. In between, you still have a TCS kind of news. The large cap IT still has problem. Mid cap IT, I think, is fine. And one last point that I normally follow, this is my own indicator. I look at the market from the stocks at 52-week high and 52-week lows. In March, we had made the point that 52-week low stocks were at 800. And that normally when you hit that, you are at the bottom. Now look at the number of stocks at 52-week high. It's only 220. Euphoria will happen. A lot of time. That will happen when this number will hit 500 to 600. When this number hits 500, 600, I'll be the first to say that, it's time to be cautious. But I think, as Ravi said, there's nowhere close to euphoria. Just because prices have gone up, it doesn't mean that, the market is euphoric.
Okay, so nowhere close to euphoria. I think that's a great place to be, right? Even if there's any FOMO factor in the market, if retail wants to jump in, perhaps it's not too late just yet. But, Anuj was making this point about the two spaces that have done well, and FMCG is one of them. Record highs is what we saw in the FMCG index this week. Any of these stocks where you think there's still valuation as well as growth comfort?
No, I feel the rural Indian economy has been going through a tough patch for the last 3, 4, 5 years. What happened is during COVID, the wages fell, and the inflation post that rose a lot, and that squeezes the spending power a lot. Now it's actually reversing. The inflation is falling and the wages are rising up. Add to that the fact that state capex has been virtually non-existent for the last 4, 5 years, and for the first time it is picking up. This year the state capex will pick up, and usually when state capex picks up, the rural areas do very well. So I think there is a lot of tailwind to the rural growth story. So I think even FMCG is just one way of playing the rural growth story. Whether it is two-wheelers or other consumption stories, everything will do well. Some probably urban consumption story can take a step back, but the rural story has just begun, I feel.
Okay, Nimesh, very interesting moves in the market, and I think I was looking at the data that you had sent in terms of the kind of stocks which are hitting new highs and what's happening in the overall market. Why don't you take us through what you've
Well, before I talk about those stocks and just from a dealing room perspective, let me just give a feedback.
Sure.
We hit an all-time high. While the markets were volatile, the one consistent part this week was the return of FI money, and this is serious money. The feedback from dealing room was that one of the largest sovereign fund has looked to increase the India weight, and that's the reason why we saw every day this week. The FI was a net buyer in the Indian market. So that's one thing. The other interesting thing was, which has been consistent for a while now, is the PE exits. Like even this week we saw a lot of blocks. Imagine on a Sunday, last Sunday, there was a block launch of Go Fashion, and 10% of private equity was sold out in 48 hours, in 24 hours. So that's the kind of appetite which is there. This week we also saw Axis Bank large block PE exit, and today we saw Kalyan Jewellers. The reporting data will come, but even there, a large PE has given an exit. So that's one big theme that I've been tracking. The other big theme is the revival of IPO market. That's what everybody's been now talking about. Look, we saw what happened with today's listing, ended at a 45% premium. Since Mankind, the momentum seems to be picking up. So that's the other thing to watch out. That apart from PE exits, there are a lot of IPOs which are likely to revive, and that pipeline looks very strong now for the remaining of the year. So that's the big theme, that return of FI money with a large sovereign fund looking to increase the India weight.
Okay, Ravi, in fact, on that, just to take that point forward, a lot of insider selling over the last 2 or 3 months. By insider selling, I don't mean anything wrong. Promoters or large investors, PE investors, a lot of OFSs getting launched, a lot of blocks. So, should one keep an eye on that as a bit of a red flag?
So, sitting in India, we sometimes don't get the perspective of the relative vis-a-vis other markets. And I recently did a trip to Middle East and Southeast Asia, and what I figured is that they are hurting badly, whether it is in China, whether it is in US tech. So US is also having a rally since last 4 weeks, but it's very concentrated in the top 7 stocks.
Absolutely.
While over here it's a very broad-based stock rally. And what has happened in the last 15-18 months is, whether it's in the listed market or in the private equity market, people have had a chance to book their gains and take the money back. And of course, we didn't collapse under the weight of $40 billion selling. And that adds a lot of depth and credibility to Indian markets. So sitting outside, those guys are looking at, if I'm looking at the world, there are probably India and Japan are the only 2 stories noteworthy, outside of US. And US is not so bullish at this juncture. Of course, stocks are rallying. As I said, it's a very narrow rally and it's all AI driven. But so India is now almost becoming that, again, cliche, but the TINA factor, as you say. In the emerging market basket, people want to have a non-Chinese exposure, and India is a natural choice. So I feel we are still at the beginning of the rally. You should look at it in a positive way. People are getting exit out of 18 months, and there is still a lot of appetite. You can never judge or estimate how much of money will come into India, but I think there's a wave or a flood coming, and all of whoever wants exit will get exit. It's not an issue.
A wave is fine. It shouldn't be a flood. That you don't take everything.
As I said, we cannot judge how large that wave will be.
Okay, all right. Let's focus back on the mid-cap space. Nimesh should put some data together. You know, we are talking about a 10%, 15% move on the index. Stocks are up 50, 60, 70, 80%. Run us through the list and some...
But actually, you know, the whole idea of this piece was to prove a point that, as what even Ravi said, even Anuj pointed out, that there's still no euphoria in the market, and that shows in the data as well. Look at Y2D, the performance of the broader indices. The Nifty is up 4%, almost at all-time high. The mid-cap index is up 11.5%, but it's already at an all-time high. The small-cap index, though it's up 10%, it's still 10% away from all-time high. You know, that's where the euphoria will come. When the small-cap index reaches all-time high, actually when it trades at a premium to large caps and mid-caps, that's when the euphoria signs will come in. So that, I just wanted to put that into context. Now, look at I've just looked at the BSE small-cap big movers this year. I mean, it's not like, you know, there are some crazy moves. If you look at the top gainers, something like an Orient Pro is up 2 times, which is up 200%. Nuclear Software is up almost 2 times. But again, the numbers are quite strong in that company. WPIL is another company which is up 150%. Stocks like Zentech is up close to 122%. So, you know, there are some good stocks which have done well, but they're not like crazily valued or like some big moves happening in the BSE small cap index. Even if you look at the Nifty small cap index, the top gainers in that list, some quality names which have moved up today. Cyient this Y2D is up 84%. Rail RVNL is up 80%. KEI Industries, again, company which reported good numbers, that's up 50%. Mazgaon Dog is up 50%. So that's the list in the broader markets. Now, also I've looked at the larger universe, which is the Nifty 500, the larger basket, and I've seen where there has been big movers Y2D. Here I want to just put some numbers and the valuations as well. You know, something like a data pattern in the broader markets, that's up 71% this year. But now on FY24 earnings, it's quoting at 66 times. So something we need to watch out for. Something like a Triveni Engineering now quoting at 52 times. ABB India is now quoting at 76 times on FY24 earnings. You know, CG Power 66 times. Siemens India. Astral is trading at 80 times, and one stock which is trading above 100 times is MedPlus. It's trading at 117 times on FY24 earnings, and even that stock has rallied 30% this year. There are some losers as well. They've lost this year Y2D, but again, valuations are quite high. Aditya Birla Fashion is one stock trading at 100 times. You know, V-Mart is trading at 100 times. Campus Shoes is trading at 57 times. So the list is basically, you've seen a bit of move in the mid-cap and broader markets as well. There are some stocks where valuation is now getting a little expensive, so one needs to be careful. I won't say expensive, but richly valued now. So that's something to take note of. But the fact is, the Nifty small cap index, though it's up 10% Y2D, is still 10% away from all-time high. So, Ravi, you know, that's what we discussed as well, right? There are some stocks even in your portfolio which have done really well for you out of your expectations, and now valuations are becoming a little expensive. How do you do to those stocks? You know, what do you do with those stocks? Do you book profits or you sit on it?
No, so it's a good problem to have, first of all. First of all, you have to have a view on the structural story. In a 2-3 years time, do you foresee the absolute market cap of the company being even higher from here or no? And secondly, markets or stocks very rarely peak just based on excess valuation. You know, excess valuation is a necessary condition, but not the only condition for the markets to peak out. If the momentum at the business level continues, the valuations can keep expanding. And there is no way to judge whether this is the peak or no. But in general, the way the business cycle is panning out, I still feel we are at an early stage of the overall economic cycle. It is the early stage of capex cycle. It is the early stage of ordering in the defense sector, railway sector. And market has recognized this is the round one. So defense has been rallying for the last 2 years. Railway stocks have been rallying for the last 1.5 years. But I don't think that they have reached a level from where, you know, there could be a 90% price erosion or any such thing. There can always be 20-30% kind of a pullback because valuations get expensive, and then once the number delivery comes, they'll find buyers again. So those kind of things can happen, but I don't see capital loss kind of a risk right now.
Okay, now let's do one thing. Let's talk about one more interesting aspect. Nigel has done some interesting research on holding companies and how they are stacking up, some of them at least.
You know, I was a little cautious while putting this piece together because the fear is, are we in that euphoric phase? But since the consensus is saying we're not, I feel a little bit more comfortable. Let me go to the big wall and explain this in greater detail. You know, so we're focusing on holding companies out here. And first you'll ask me, what is the benefit or why should you be looking to play a holding company? One is you get a chance to play a bigger, group or a larger set of stocks. The underlying value obviously is at a bit of a discount. And also, if the group is good and it's a well-run group, then you'll be getting dividends because the core company will be paying some dividend. The holding company gets it, and then you'll indirectly get in there. So we're not going to look at all the holding companies. I said, let's focus on 5 big groups. First up, we're looking at the Bajaj Group, and there are 2 companies in there. One is Maharashtra's Scooters, and the other one is Bajaj Holdings. Now, Maharashtra Scooters in the last 1 year or so, they have increased their dividend, and if you club the interim as well as the final dividend, it was nearly around 150 rupees. The stakes that they hold in various companies, group companies, should come up for you on the screen. And to summarize it, well, the company, Maharashtra Scooters, the discount to the value of its holdings is nearly around 75%. Can this decrease go ahead? Well, time will tell. The other one is Bajaj Holdings. Out there, we have already seen that discount narrow a little bit. So, and the promoter entity in there has gradually been increasing some stake in there by a couple of percentage points odd, which could explain why the holding company discount as well has narrowed a little bit. That's their top holdings that they have. That's Bajaj Holdings. While if you look at the summary, well, that holding company discount from around 70%, 60-70% has come down to around 46% approximately. Next up on the screen would be Tata Investments. Now, they calculate the value of what they are holding as of 31st of March. So I equated what would the market cap be on, the 31st of March. And putting those numbers together, the holding company discount is close to around 55%. But one thing about the company is they've started gradually increasing the non-Tata Group companies as well. So close to around 75% of their holdings is towards Tata Group. And the list comes up in the screen, but close to 25% is from non-Tata Group as well. So they're diversifying themselves a little bit. Sundaram Clayton, in fact, that stock this week was a bigger outperformer in comparison to the TVS Motor stock as well that it holds. So let's run you through a few details. They've already given a fixed component. That's around 1,160 rupees, non-convertible share that you already would have got if you bought it a few months ago. But as of now as well, there's a scheme that's currently underway. So the value of the business that has to be demerged even from here is around 1,200 crores. They do around, sales of around 1,200 crores approximately. It's a profitable business as well. So at least 1,200 crores. So X of that, if you look at the business and then you take out the value that they have in TVS Motors, it's still the holding company discount is quite large. That's around 75% in terms of the holding company discount. Moving to Kirloskar Industries, well, that as well has taken a whole host of companies that come up for you on the screen. But the holding company discount out there is only around 46%. But I went further into their annual report and their presentation, and they have a couple of real estate assets in Pune. So close to 2 million square feet of developable land, as well as 75 acres of land as well that they have in Pune. So maybe that could be one of the reasons why that holding company discount is narrow. And finally, EID Parry, well, we had the management who told us that the ethanol sales will move up from year on, which is important. They've also said that, in fact, the interest cost, that's been gradually coming down. That's because they've sold some part of their stake in Coromandel Finance. So summing it up then, you have the holding company discount out there is close to around 71%. So to put all those, groups up for you on the screen, well, it looks like Maharashtra Scooter, that could be interestingly poised, as well as Sundaram Clayton. Will they narrow? Could this be an indirect play? Well, time will tell. Back to you.
All right, thanks a lot for that. Well, let's do one thing. Let's take a quick commercial break on that note. On the other side of the break, we'll talk about how auto stocks have been some of the best performers this year and what are the key triggers that are driving growth. We'll also get Ravi's view on the auto space. In case you missed out on the rally, what do you do now? More on that coming up in a bit. Stay tuned.